Welcome to Cryptonomics.
There's been a lot of talk about cryptocurrencies crashing, and with Bitcoin down over 40% year to date, a lot of new investors might be panicking right now.
But how are cryptocurrency in general, and Bitcoin in particular, actually doing right now?
And how do you live through a collapse in price? That's the topic of today's video.
Even though media is claiming that Bitcoin has crashed and a lot of naysayers have been proclaiming that they were right all along, Bitcoin is still up over 7 times compared to last year. That is a huge return.
And even though the price is falling over the last couple of months, the fundamentals are stronger than ever and the development of the Bitcoin protocols is moving along with haste.
Today we will take a look at how Bitcoin has done in previous corrections, where we are in the cycle right now, and how it could evolve in the future.
This is of course not the first time we've experienced price drops in Bitcoin markets. Just in 2017 alone, we had 3 corrections with more than a 30% drawdown.
Going back, we've had price corrections of over 80% in 2010, 2011, and from 2013 to 2015.
So seeing your account in red is not a new experience for early investors, but it might be frightening to those who bought on the top.
We do not claim that we know where the price is going. Frankly, no one does. But we can learn from history that it's always been a bumpy ride.
What does a market crash actually look like?
A lot of people talk about corrections as being the perfect buying opportunities. However, timing the bottoms is just as hard as timing the tops.
A market isn't only greed and fear. Between those two states, there are periods where we aren't moving up or down in price, but sideways.
We call this stage apathy. And this is where the markets are fumbling for a new narrative to convene around.
Like Bitcoin enthusiast Vijay Boyapati said, bear market bottoms are formed after prolonged periods of false rallies, increasing disinterest, and eventual apathy. The mindset is, I give up, I'll look for returns elsewhere. It also coincides with a dwindling of media interest.
What does that mean?
If this truly is the bottom of the Bitcoin price, we will probably move in sideways for a long time.
There might be some rallies and there might be some corrections, but over time there won't be any obvious uptrends or downtrends, but rather a sideways drift.
Consider the period between the end of 2014 and the end of 2015. We had a lot of good buying opportunities if you could time the market.
But in the end, we saw no real price difference in the long run.
A lot of people bring up the classic bubble chart and they try to match this with the Bitcoin price chart. This might be a fun exercise, but it doesn't really tell us very much about anything.
Instead, consider the Gartner hype cycle. Right now, we are probably somewhere between peak of inflated expectations and trough of disillusionment.
A lot of hype has been built around cryptocurrencies. It garnered media attention and tremendous returns. But this does not mean that we'll have mass adoption anytime soon.
But considering how fast everything else is moving in crypto, it might not be that far off.
Look at developments like the Lightning Network, Proof of Stake, and other technical advancements of the cryptocurrency community.
When we get to the plateau of productivity in the hype cycle, the price might not be as great as it's been previously, but the value for society will be tremendous.
Developers don't really care about the price. Work continues no matter what the markets are doing.
Looking at Bitcoin, the fundamentals like security, usability, and liquidity are all improving at great speeds. The idea of a digital asset are not going to go away anytime soon.
A medium of exchange that can be moved around the world instantaneously and for a low fee is something that is sought after.
And if you prefer Bitcoin as a store of value, look at how it compares to gold.
Most people know about Bitcoin today, and asking millennials, they prefer Bitcoin over gold as a store of value.
This is because non-native internet users considers everything digital as not real, whereas digital natives considers the internet just as real as the offline world.
Therefore, they can put their trust in a digital currency in a way an older person might not.
And to this, all the pros Bitcoin has over gold, like ease of storage, ease of moving, and the non-negotiable fixed supply.
The amount of people who own Bitcoin in the future might be a lot higher than most imagine.
Whatever happens on the markets in the short term, Bitcoin has stood the test of time and will continue to deliver value for those who need a decentralized digital asset.
And if we look at the altcoins using proof of stake as a consensus algorithm, this is also something that could be huge.
In our current low interest rate environment, where savings account basically yield you zero, a proof of stake token can provide you with a basically risk-free interest on your savings.
Even the old timers can't say no to that.
Thanks for watching this video, guys. If you liked this video, hit the like button and subscribe to see more.
And please comment on what you would like to see next.
See you next time.